course, a lot is happening at the national level as well. That absolutely is an important way of fighting this crisis. The step towards 540 was already significant because a few historic steps have been taken, with the ESM being available unconditionally if the money is spent on health-related issues. The new SURE program that's been put into place to help short-time working programs in countries. So the way that these things happen in Europe is usually that steps are taken that are sometimes smaller than what people initially wanted to or bargained for, but initially they are historic steps that are important in fighting this crisis. And whether it's enough, that's something that really we'll have to see by the week almost as this crisis is developing so quickly.
But it clearly isn't enough, is it? Because if we look at what we've seen so far, 750 billion from the ECB for this asset purchase programme, and then the 540 billion from the Eurogroup that came in April. If you look at where we are on peripheral sovereign spreads, effectively, we're about 50 basis points wider than where we were at the start of 2020, which tells you that the market still has some doubt that there will be a cohesive and coordinated response that is big enough for this crisis. So let me ask you, what could we get on Thursday at this EU video conference that can bring down those spreads?
That's a very good point. And I think that you're absolutely right that what the market is really looking for is for a big response from Europe here that will take all the worries away about peripheral countries. What we know from Europe is that these things probably will move slower than what the market is expecting. So therefore, the real response that we're going to get to see spreads come down again is likely more to come from the ECB, and especially in the way that they put that they are purchasing in the pandemic emergency purchase program, much more than what we're actually going to get out of Thursday. It would be a big surprise if we were indeed going to get something like a Corona bond, which is probably what at least some investors are hoping for, because that would bring some relief to the situation. Ultimately, we're also in a negotiating phase. That's important, and that also will make the position of some of the countries a little stronger now. We will probably get to some solution between them, but whether that's enough to really satisfy markets for spreads to come back down to where they were pre-corona, that's probably not going to be the case. We're probably going to see some uncertainty in the market for a while.
But let's just get a reality check here. I'm interested to know what your forecasts look like. McKinsey out over the last couple of days suggesting 59 million jobs are at risk now across Europe, and they're talking about a doubling of the unemployment rate from where we are at the moment to something in excess of 7.5% across the bloc. What have you got penciled in?
Well, that's a very good question. So I think at the moment, all of these forecasts, since they are so dependent on how long these lockdowns are going to take, it means that you're just going to be shifting by the minute almost. The latest forecast that we've put in is for a decline of just over 5% of GDP over the year. We're likely going to be revising that as we see that lockdowns are taking longer at the moment. And it will indeed have an impact on unemployment. The question is almost not what the unemployment rate is going to be at the end of the lockdowns. The question is how quickly that can bounce back again. We're seeing huge numbers out of the United States with very high unemployment, which in Europe is likely going to be somewhat better because of the fact that we have larger automatic stabilizers in place and because of the fact that a lot of the fiscal response from individual countries has been focused on keeping people at work. Still, indeed, we're going to see unemployment rise very quickly, and especially temporary jobs and people that are self-employed are likely going to get the brunt of that. The question is, if an economy can bounce back relatively quickly, then we're going to see that unemployment number come back down relatively fast again as well. It's much more about where the unemployment rate is going to be in a year than where it's going to be at the end of this lockdown. And that's still very difficult to tell because it very much depends on how effective these government measures are going to be. I think that we can expect that there will definitely be some permanent fallout from this, and that it's going to be somewhat substantial. But we'll really have to see how these measures play out.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.